When you look at today's markets, you see two very different worlds colliding. Obviously, you're a priest and you're a hedge fund manager. Two careers that, at first glance seem like polar opposite.
Wall Street, everyone thinks they're smarter than the next guy, right? I mean, you don't go there to find great humility. I think the desire to get rich fast is where so many mistakes are made. I remember coming back from China a few times and just telling my staff, I said, they're going to eat our lunch. We're in big trouble. The further separated you are from your money, even geographically, the chances of you never seeing it again go up.
Or how do you see demographics impacting value investing? Have they impacted what you invest in? I own Bitcoin. I'm also a gold bug, but there's a lot of people who think it's the digital gold, it's the future, whatever. And then there's a lot of people who are like, this is smoke and mirrors, it's a scam. What's your take on Bitcoin? Before we get started, this isn't financial advice. Know your risk tolerance, do your own due diligence, and speak to a financial advisor. All right, welcome back to another pod. Very excited about today's episode and guest for many different reasons. But to start off, when you look at today's markets, you see two very different worlds colliding. On one side, you've got speculation, momentum trades, AI-driven moves, wild swings in crypto, so-called meme stocks. And then on the other side, there's patience, discipline, digging deep into fundamentals and letting time do the work. My guest today sits firmly in that camp. Father Emmanuel Lemelson is not only an Orthodox priest, but also the chief investment officer of Lemelson Capital Management. And he's probably one of the only hedge fund managers in the world who can both quote Buffett and the Bible in the same breath. So today we'll talk about why timeless principles still matter in a pretty noisy, algorithm-driven market with FOMO growing, deficits exploding. And we'll talk about how values and stewardship can actually shape smarter investment decisions. So Father Emmanuel, welcome to the pod.
Thank you so much, Aaron. It's really such an incredible privilege to join your show. I just love your show. You're doing such an amazing job. So thank you.
Thank you. It's truly our pleasure. So before we jump into the markets, I want to touch on your background because
Sure.
I've been listening to you for a little bit now. I've watched you on David Lynn. I've watched your own podcast. I think your message is important, and I think your background is very important. So obviously, you're a priest and you're a hedge fund manager. Two careers that, at first glance seem like polar opposites. So what came first for you? Was it faith or finance?
It was probably about the same time, to tell you the truth, Aaron. I was a young guy growing up in the Seattle area, which was a very fertile ground for successful companies like Boeing and Microsoft, Amazon, and so forth, Real Networks and some others, especially during in the run up to the dot-com bubble. And I was this young guy, like I must have been 16 or 17. I was just watching all these people get very wealthy. Their families get wealthy from stock options. I would look at their parents and say, well, they're not really working harder than the next family, but they were growing quite wealthy because they had all these stock options at Microsoft and whatnot. So I was kind of mentally making a note of that. I thought it was interesting. And then around that time, I would say I was maybe 17, I met my mentor, which was a priest. And it really had quite an impact on me. And I felt this overwhelming calling myself to serve the church. And that was a very, very strong calling. Whereas the interest in public markets was like an intellectual curiosity, if you will.
Right.
Nonetheless, I went on to pursue multiple degrees in theology and pursue the course of serving the church, but never fully got away from my interest in capital markets. And when you're in a seminary, I know they seem like polar opposites, as I think you said, but when you're in a seminary, you study psychology a lot because your life is given to people, frankly. So you're always working with people. But there's a huge component of capital markets that has to do with psychology and sociology as well. And eventually, in the run up to the Great Recession, so we're fast forward a decade or so, I stumbled across the work of Ben Graham, and he had this. I never really, prior to that time, I took a cursory interest in the markets, but it was like throwing darts at a board. Maybe it hit, maybe it didn't. I was doing like probably what most speculators do, reading headlines, watching prices, that kind of thing. But when I got this book, The Intelligent Investor, I picked it up at Borders right before they went bankrupt. They were a competitor of Barnes & Noble. And right on the cover of this book, The Intelligent Investor says, a quote from Warren Buffett says, the greatest book on investing ever written. I'm like, well, that must be important. And right next to it on the bookshelf was Security Analysis, the other sort of like gigantic tome by Ben Graham. And I took it home and started reading it. And after a few pages, I'm like, well, I know what all this is about. And I'm like, gosh, I'm so arrogant. Aaron, that's what I was saying. Like, this is like the dean of Wall Street. It's Warren Buffett's mentor. I've read like 5 pages and I think I know what it's all about. So I put it down and I didn't touch it again. I was just like, well, this is ridiculous. Because Wall Street, everyone thinks they're smarter than the next guy, right? I mean, you don't go there to find great humility. Anyways, maybe 6 months went by and I picked it back up and I started reading. I just read the whole thing cover to cover and I was amazed. This concept, this basic principle that, buying a dollar bill for 50 cents killed 2 birds with 1 stone, that you would protect principal and you were likely to get a better than average rate of return and you could consistently do it and compound your capital. And that it was a skill you couldn't really be taught, that schools weren't teaching it. It didn't matter, how long you could go to Harvard Business School or whatever, the best business schools in the world, UPenn, and you wouldn't necessarily learn that because it was more of a personality type. And that just struck me. I was like, really, that is unbelievable. Because until that point, before I was ordained a priest, I had started a few businesses and ran them. I mean, I was always kind of thinking that way in terms of operating companies. Like if I just knew if I could buy things right, that it wouldn't really matter what price you sold them at. So, but I never had this sort of clear framework like Ben Graham lays out in his seminal works. And I set out to sort of figure out if that was true, what he was saying. And Buffett, of course, would memorialize this concept in his great essay, The Super Investors of Graham and Doddsville. If you haven't read it, read it. It's published by Columbia University. It's like a 10-minute read. And I really wanted to find out if it was true. So I started to publish articles and put them out there. I thought, well, I think it's just probably hubris. I told my wife, I said, well, I think I'm going to be like one of the best investors out there, which is the least humble thing you can think or say. And I said, but if I publish my work and my analysis and I put it out there, if I'm wrong, I'll be outed, right? Like people will be able to scrutinize it and they'll say, look, it's just another guy who thinks he's smarter than everyone else. And so I put the stuff out there and they sort of came true one after another and it really worked out well. And then of course, there was actually 8 years between the time I finished seminary and I was ordained. And during that time, I was functioning as a businessman, though my heart and my mind are really in the church, but I was always working in the secular world. And, when the bishop called me, he said, we got to ordain you, you're getting kind of old, 8 years since you graduated. Like, what are you doing? Like I know the story of the turtle and the hare, but it's getting ridiculous. It's like the 3-toed sloth in the hare. And I told him, I said, well, I've been working on this, the security analysis stuff. And, what do you think? And he thought I was talking about like security analysis, like physical security, like bodyguards and like security camera. Like, no. Security is like making sure you have what your security interest is in an equity or a bond or something. And he said, oh, okay. He said, well, does the church pay you? I'm like, no, I always go to the poorest churches. And he's like, you got a family? I'm like, yeah. He's like, well, keep doing your work. I'm like, oh, okay, that's great. And then I thought, but there is this sort of inherent conflict, right? Historically in the church, we shouldn't pursue the collection of interest. The word for that is usury. And it is a conflict. But then we do find in the gospel, these parables, like the parable of the steward, the good steward over his talents. And, when you look at most churches today, whether they're Catholic churches or Protestant churches or Orthodox churches, there's always an economic component. I mean, let's be honest. At the end of each service, a basket's getting passed. Yeah. And they have real operating expenses and they have ministries and good things they want to do. They could have hospitals or universities they have to fund. So being a good steward over capital, I think can be Christian. It's just that it can never, Aaron, in my estimation, can never be an end in itself. You can never have the mentality that I'm pursuing wealth for wealth's sake. It has to always be a good beyond yourself. It has to be always for the other. I think there's a spiritual law that if you're pursuing wealth for yourself and you're keeping a very large amount beyond what you need or use, it really can lead to a curse, actually. And we see that time and time again where you see the wealthy, they suffer. People think their lives are great, but they suffer. And sometimes where there's great wealth, there's great suffering. And so, I think if we have those concepts clear in our mind, Aaron, that yes, I have this talent. Yes, I can do these things, but it is a gift from God and I need to use it for more than just myself, for more than just my family. it's not about the accumulation of wealth for the sake of that activity, I think it's probably okay.
Yeah, it's interesting. I grew up Protestant and I converted to Catholicism as an adult. But I remember there was two scenarios in my life that kind of made me, I don't know, it created this conflict, as you mentioned, about money and the pursuit of it. And the first example I had was when I was growing up Protestant at my church. I remember my parents talking about the latest. It was a dramatic, kind of a debate at the church. There was this very successful businessman, and he was a great guy. He's relatively humble for his means, but he bought a brand new Lexus, and there were people in the church who were poo-pooing that, and people on the board who it at least as a kid, as an onlooker, the way my parents were talking about what was going on at the church, I was like, holy, they're this upset about a guy buying a Lexus? Like, this seems a bit much. He's a very successful businessman. I knew him as a very generous man. So there's that. And then when I converted to Catholicism, I had a spiritual director, and great man. And but there was this, I would meet him every Tuesday, and there was and I would tell him about what I'm dealing with in life and some of the challenges. And my work is focused on venture capital, and it's there's a pursuit of gain, and it's financial. And there was this always sort of a guilt I felt just by what he was explaining to me. I always felt a guilt about pursuing money. And I know, as you say, it shouldn't be for the pursuit of money, but it's the financial markets. If you do well, if you're trying to find companies that you're going to make money on, and so forth. But yeah, there was to this day there's a conflict there. I don't want to dismiss all that, because there's a lot we could keep going on.
Well,
but
yeah, whatever you want to do. Sure.
I want to just jump back to the markets. But with your personal story in mind. So how has your faith, if it has, kind of guided your investment philosophy? How has it guided you on how you invest at all?
Yeah, I think so. I think it just happened naturally, Aaron. I first started doing work for other people for free. I worked for free for like 3 years when I really got seriously into security. I published like 200 articles on security analysis, analyzing what my thesis was, what I thought, where I found price value dislocations. And I just wanted to see, would people be able to poke holes in it? Mm-hmm. And I really found a love of accounting. I mean, the language of business is accounting. A lot of guys are into business and they think it's sales, drive sales. It's true, sales are important, but the language of business is accounting. The oldest written records we have in history are financial records from ancient Mesopotamia. So you got to know accounting. So once you get into accounting, you start to understand and analyze financial statements. It leads you down a pretty interesting path. So while you turn on CNBC and you hear all this chatter, blah, 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 and all these commentators and articles, very rarely do they have to do with like, what are you actually getting for what you're paying? Like, what's the value you're getting? And to understand that, you have to be able to read the income statement, the balance sheet, and the statement of cash flows. But to get back to your question about reconciling that with Christian belief, our Christian faith, and our morals and so forth, eventually I came across companies that were fraud. And then you're in a really interesting position. You're a fiduciary on the one hand for investors. So I had worked all these years for free, and eventually my investors were like, look, can you just manage money for us? We'll pay you. I was like, no, I don't really want to run a business again. I'm not too into running businesses. But that, together with what my bishop was saying, eventually I acquiesced. They're like, well, you have a family, you're working for free. This is ridiculous. So eventually I started my first fund, and it grew pretty fast. But shortly after starting that fund, I'd come across some frauds. So frauds can take a long time to be revealed, but it's a point where you're saying, I'm a Christian and I found some impropriety. Now, if you wanted to just not be very Christian about it, you could say, well, I don't want to rock the boat. I don't want to upset investors and brokerage firms and private equity groups. I'm going to make a lot of enemies if I reveal this, because a lot of people have put money on this in this security. And they're not dumb. A lot of the guys know there's things that are not right, but they're being promoted. They're promoted stocks that everyone's going to make money on. there's pump and dumps everywhere, especially nowadays.
Let's face it, one of the biggest frustrations investors have is taxes. You make the right call on that stock or explosive crypto trade, and then boom, half the gains are taxed. You took the risk and won, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod today, iTrustCapital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Of course, you probably know trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrustCapital is they use the same institutional-grade custody for crypto that BlackRock relies on. That is peace of mind, and they do it with no monthly fees, just a simple 1% transaction fee. I've spoken with the team, and I like these guys. Real US-based customer service, security, and real tax advantages. And while I personally hold exposure to Bitcoin, gold, and silver through ETFs and mining stocks in my own retirement account here in Canada, iTrustCapital gives US investors the ability to hold the actual assets directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, check out our custom link in the description below and be sure to use promo code Pinnacle8 to claim your $100 funding bonus when signing up and funding a new IRA plan with at least $1,000. As always, all investments carry risk, and this isn't investment advice. Now, let's get back to the pod. So the markets, obviously nowadays, they move faster than ever, and they're moved a lot of the time on narratives, right?
Yeah.
Like there's just a ton of noise out there. Even Stanley Druckenmiller, I was watching an interview. He said that at times, in certain times, especially in recent times, he invests and then he investigates. Like a concept that he was talking about, I think, when he took his position in NVIDIA, essentially that saying like, the markets move so fast now that if you, I don't want to misquote him, but if you get like a hunch or you have good evidence to say that this is possibly one of these, once every 5-year opportunities, you got to make a move. You got to at least get your toe in the water. And then do your investigation, do your due diligence. But he said that just kind of in relation to how fast things move, because if you miss that trade, he's saying it's so psychologically hard to enter a position that you were looking at, but your due diligence process may take 2 or 3 months. And in the interim, the stock goes crazy. And he says it's this mental challenge to overcome that and still take the position, even though you've already seen the stock take off. So what I'm trying to get at is, given how fast the markets move, how do you go about taking positions in companies you like, not on the short side, but on the long side? Is it a long due diligence process and then you take a position, or are you challenged by the speed at which the markets are moving these days as well?
Yeah, there's a lot. Okay, there's a lot in that question.
There is a lot in that. Sorry.
First, I'll just say that we've had our ups and downs in our funds too.
For sure.
And everyone says, we're long-term oriented, but if you're a value investor, you really have to be. It's true that things are accelerating everywhere in life, and including in the markets. And a lot of that's because of algorithmic trading, which you mentioned earlier, which I think is about 75-80% of market volume now. There's a saying that I think it was Warren Buffett said that successful people say no often, and really successful people say no almost all the time. So, if you're getting really excited, you have a hunch, those are feelings. Feelings can be really fallible. I would say just at least do a cursory check. Yes, good due diligence could take 2 to 3 months, especially if you go and you meet with management teams and stuff. I'm sorry, I got to fly around here. But you could look at the balance sheet and the income statement and figure out, like how much margin of safety do you have, or negative margin of safety do you have at the current price? And then you could just look at some quick quarterlies, listen to some quick conference calls, let's say an hour or 2 of due diligence. You don't have to jump right in. And then you'll have a sense of, is it safe? And in terms of the actual math behind it, like you gave the example of NVIDIA. Let's say it's going to go up 2,000% in the next 10 years or something, right? And so the price today is 5 and it goes to 7. You're like, oh my gosh, it's gone up 40%. But like if it's going to go to like 200, it's not even material, right? Mm-hmm. So if you're really long-term in your thinking, that what seems like large permutations in price in the near term are not actually large.
Right.
That's a mathematically true statement.
Mm-hmm.
So I think the only way to make that work, if that was Stanley Druckenmiller, is to always have, by definition, a short-term view. If your view is really long-term, even if it takes you 2 or 3 months to do your due diligence, but you're saying, I'm probably going to own this for 10 years, it's paying me a dividend, whatever, and it's going to compound like crazy and it's going to go up like an NVIDIA, I would just say do the due diligence first. It's okay to miss a lot of opportunities. It really is. You know, I think it was Warren Buffett said, it's better to get rich slow than to get rich fast. I think the desire to get rich fast is where so many mistakes are made.
Absolutely. Absolutely.
So, but that having been said, there is also not only things moving faster now, but there's incredible volatility in markets now. It seems to me it's much greater. I'm sure there's probably studies on this than it was, say, 15 years ago. You're seeing sometimes really great companies collapse really suddenly, like 25, 30%, 40%. And you're seeing them go up the same way. Like I don't know if you follow some of these issues, but it's just unbelievable, the volatility that would have been unthinkable.
Well, look at Oracle, just whatever it was 2 weeks ago.
40% in a day, right?
Crazy.
And Larry Ellison, I think, passed Elon Musk at one point. And if something like that's happening, you know the company pretty well, or you can quickly look at the balance sheet like, okay, wait a second here. This is like, you look at the earnings history, like for 15, 20 years, they've had consistent earnings. Consistent earnings are very important. Look at their margins. Okay, they've got great margins, software margins. You know, I'm not talking about Oracle in this case, but let's give an example of another company like Adobe, for example, which is quite unpopular right now. It's like the anti-Oracle. And you can analyze what the company is and you think like it falls off a cliff one day. Like that, you should probably act on quickly, even if you can only get in 30 minutes of due diligence. As long as you know you're not buying a speculative piece of junk, like an IPO or pharmaceutical company that's, you know, has all of its $10 billion market cap, you know, hinging on one FDA approval or something like that. And, you know, like, okay, this is coming really long, consistent earnings. And like, even the numbers aren't bad, but the market's overreacting. Algorithms are probably driving this. Then like, I would say, yeah, if you know what you're doing, even if it's only 30 minutes to do this, you can act quickly. But it has to be, again, with the idea that you're buying an A+ company, A+ management team, long history of consistent, I repeat that, consistent earnings and above average margins. There's not that much risk in that, I don't think, especially if you're just clearly making a pricing error. You should be quickly on that.
If we're talking about broadly on a sector basis, do you see any kind of unloved sectors right now that you like, or are you specifically on a name-by-name basis?
Well, you know, certainly you could do both. You could say, like earlier this year, retail was destroyed with the tariffs. And we had like 3 appearances. You mentioned David Lynn earlier. We had 3 appearances on David Lynn where we laid out 7 or 8 names. So we're buying these aggressively. They were like Kohl's and Walgreens and Nike and a bunch of other names. They all went on to outperform pretty dramatically. I think Kohl's went up 200% after we said we were buying it. Walgreens went up substantially as well. They all did. Guess was another. So you could say, well, there's a whole sector that's beat up, but not each issue within that sector will be equally good. So you could just do a comparison and say which one has the best margins, which one has, let's say, the highest enterprise value to EBITDA ratio. That's a great metric we like to look at. You know, owners' earnings per share is really another good one to look at. What's the margins? So let's say the whole sector is beat up. You're like, I'm a value investor. We're going to go shopping here. But let's try to find the best ones, because you don't want to diversify just for the sake of diversity's sake. You know, you want to ideally put capital behind the ones with a demonstrably the best margin of safety and that are most likely to get better than average returns. So again, you're going to have to get involved in accounting. I think it's security now is probably unpopular because it involves reading accounting, you know, financial statements, which involves accounting, which not a lot of people like, but you got to do it. You just have to, because otherwise you don't really know what you're buying. So, but once you get good at it, it's easy. Like anything else. Like you were asking me how much time, 2 or 3 months to do it. I was like, I don't think I would spend 2 or 3 months on due diligence on anything anymore, because once you've done something for thousands of hours, it's just like second nature, you know, Aaron? Right. Like podcasting. I mean, you're a great podcaster because you've done it quite a bit and it comes second nature to you.
Interesting. So when you look at have you looked at what's your thoughts on China? Have you looked at any names in China? Because when I think about and I know it's kind of a hornet's nest, there's issues, there's obviously with the government, Um, it seems cheap. And do you invest solely in America, or do you look abroad as well? What
Yeah.
I'm trying to say
Well,
is I think I see value in China, but I don't. I know there's a lot of risk there, but what's your
yeah.
take?
Well, in a prior life, I did business with China when China was just emerging. I had a company that manufactured and sold photographic equipment online. It was a totally different industry. It was very successful. It was wildly successful, actually.
Hmm.
And we were one of the first to manufacture professional photographic equipment in China. Prior to that, everything was coming out of Europe, like France, Germany, and so forth. Like you probably heard of like Carl Zeiss and
Mm-hmm.
maybe Manfrotto tripods. If you go to an Apple store, you still see Manfrotto tripods. Those were all made in Italy. Eventually, they moved over to China. Actually, that company almost bought my company. This company called Vitec. It was traded on the London Stock Exchange. Probably should have sold it to them at the time. I didn't. At any rate, I remember coming back from China a few times and just telling my staff, and just this was before I was a priest. There was this 8-year gap between the seminary and being ordained.
Right.
And I said, they're going to eat our lunch. We're in big trouble. Like we're all going to have a Chinese boss. And like, cause they work like crazy. They're disciplined, they're organized. It's a homogenous society. They're all in agreement. They still think China is the center of the universe. And like, we're talking, like I'd be interviewing kids from college and they'd be like, yeah, I need to work from home 3 days a week. And I'm going to need at least 4 weeks of vacation time. And I need to leave early without notice. And I'm like, we're just going on and on. I'm like, well, do you want the corporate jet too? I mean, what's next?
Yeah.
You know, so like you just graduated from college and like you go over to China and it looks like they like start their morning by drinking 5 Red Bulls.
Yeah.
And you're like, my gosh, these people are like really focused and working really, really hard. So that was maybe 20 years ago. I'm like, yeah, they're going to eat our lunch. Get ready. So where are we at today? You're probably familiar with all the frauds that have come out of China.
Yeah. Yeah.
All right. Yeah. So, you know, they have different standards for accounting. And I would say if you don't really understand the legal system and you can't get access to the management teams very easily, I would be reluctant to go into any market, whether China or anywhere else, because you really got to know what you're buying and you have to understand your legal right to it. And if you get taken for a ride in America, it's not the end of the world. Even Ben Graham had at one point been taken advantage of by a fraudster, you know, one of the greatest investment thinkers of all time. It could happen, but it's not the end of the world because you have recourse to a legal system that's pretty good still.
Mm-hmm. Mm-hmm.
But what are you going to do in China?
Yeah.
You're going to China, you're going to sue someone. You know how the legal system works. Is it worth it?
Yeah.
So, you know, you got to think about those things. And I think there's like 10,000 issues in common stocks in the US. That's a lot to choose from. You know, you have to really run out of ideas before you start going to other markets like India or China. You have to be like, well, I went through all 10,000. I couldn't find any value. And it's like, really? With all this volatility, you couldn't find any price value dislocation? You just go all the way to China. I mean, on some level, even in Holy Scripture, you can see this idea that many people have that we're going to go off into a foreign land, a faraway land to find our treasure. Very often it's right in our backyard. You don't have to go that far. And I would just say that the further separated you are from your money, even geographically, you know, the chances of you never seeing it again go up.
Interesting. So, wow, that's really interesting. So, staying on kind of value investing, one of the issues that, so I speculate a lot in my career, but I've managed my own money, and it's value investing long term. I think, you know, my greatest advantage at the moment, and many people have the same advantage, is time horizon, right? So I'm a value investor on the money I manage on my own outside of my personal career, which is a lot of speculation, a lot of venture capital. But one of the things that I constantly try to challenge myself with on what I'm investing in on the value side is the demographic cliff that I think we're heading toward, or if not already there.
Oh yeah.
This is a fertility crisis in the Western world. Let's face it, one of the biggest frustrations investors have is taxes. You make the right call on that stock or explosive crypto trade, and then boom, half the gains are taxed. You took the risk in one, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod today, iTrustCapital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Of course, you probably know trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrustCapital is they use the same institutional grade custody for crypto that BlackRock relies on. That is peace of mind. And they do it with no monthly fees, just a simple 1% transaction fee. I've spoken with the team and I like these guys. Real US-based customer service, security, and real tax advantages. And while I personally hold exposure to Bitcoin, gold, and silver through ETFs and mining stocks in my own retirement account here in Canada, iTrustCapital gives US investors the ability to hold the actual assets directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, check out our custom link in the description below and be sure to use promo code Pinnacle8 to claim your $100 funding bonus when signing up and funding a new IRA plan with at least $1,000. As always, all investments carry risk, and this isn't investment advice. Now, let's get back to the pod. A lot of our economy is built on an ever-growing demand side, which is people. And a lot of business models were built on that as well. Like you just look at, real estate developers, whether it's residential or commercial, like that's based on more people.
Yeah.
We aren't,
it's like money supply.
Exactly.
Consumer supply. Yeah.
So I'm not trying to commoditize human beings in any way, but it's just the narrative is more people, more demand. So invest in businesses that feed the demand. But that seems to be, I'm very worried about that. So from an investment perspective is people aren't having, families are smaller and smaller. Fertility rates are collapsing. They've been on this trend for 50 years. I try to stay away from like consumer businesses because of that fact. And then I'm driven into, okay, what's going to increase productivity? And then, so it's like you're heavily tilted toward the NASDAQ, AI, and then you're overexposed in that space in case it doesn't pan out. This is, again, sorry for the loaded question, but let's simplify it. How do you see demand, or how do you see demographics impacting value investing? Have they impacted what you invest in?
Really great questions. Very valid. I agree with you about the population collapse problem. You see it in Western Europe. It's very poignant. And what you're actually seeing is population replacement in Europe as well, by the way. Mm-hmm. In Vermont, where I often am located, not always, I don't really live in Vermont, but I'm often there. It's a great example. It's a canary in the coal mine where they're literally closing birthing centers throughout the state. But getting back to value investing and consumer stocks and so forth, I would just say that we don't really know that it will continue on this path. We're seeing a resurgence now in America, a religious resurgence, which is incredible. I can tell you that every church I serve in is packed. I get 5 messages a day from people asking me how they can be better Christians and get back to church. I don't even know what to think. I never thought I'd see this. I never thought in my lifetime I'd see the pendulum swing. But here we are. So we don't really know. You can't really invest just on the macro, like what's going to happen for sure, because you don't really know for sure. Mm-hmm. And the second thing I would just say is that if you're looking at a balance sheet where you're like the Kohl's investment, for example, you can go back and watch that David Lynn report. We've got some great articles on our Substack. We have a great Substack subscription you can subscribe to where we really get into the balance sheet and we get into our price value dislocation, explain where the margin of safety is. We're saying like Kohl's trading for 24 cents on the dollar. Like, are we wrong? Maybe it's not $1, maybe it's 80 cents, but it's not 24 cents. So the thinking for the value investor is the inversion of the speculator. He says to himself, or her says to herself, whatever, I don't know what the price is going to be tomorrow or next week. I don't know population growth or collapse is going to be next month or next year. But I do know that I have such a magnificent margin of safety here that I can even afford to be wrong and still be covered. Mm. So whatever happens with the population, it's probably not going to happen in the next 6 months or even the next year, even in 5 years. And in that time, it might very well reverse, frankly, Aaron. So I would say get into what can be known and avoid what cannot be known. Macro issues tend to be heavily weighted on the speculative side. Yeah. The point is, you can know a balance sheet. You can know a statement of cash flow. You can know margins. There's things you can know, and there's things you can't. So why make it so hard on yourself? Like, you don't get extra points for difficulty. Mm-hmm. This isn't Olympic diving, Like, just take the easy ones. Take the soft pitches, Like, and go with those ones. The other one, if it gets difficult or complex, you're like not sure. You're like, well, I'll just move on, Yeah. Well,
on that note, we have a lot of young viewers of our pod, and I find that, and I get sucked in it too, but the narrative is obviously very big, but I find that young people are so, and this might be a symptom of just being young, but it seems more so these days that they're so caught up in, I've been given a bad hand economically. I'm not going to own a house, or it's going to suck up all my money, or they have student loans or whatever it may be. They just feel like they've been dealt a tough hand. So I find a lot of them are shifting toward being speculators. I mean, early 20s, and they're shifting into things like, altcoins, obviously crypto, meme stocks, all this stuff. What would be your message to those types of people as far as generating improving their standing in life via an investing strategy? Like, what would be your message to them? Go learn how to read balance sheets. Go learn how to read financials.
Definitely learn accounting. Read The Intelligent Investor. Read the Super Investors of Graham and Doddsville. Maybe read from some of our essays if you want. They're on mvona.com. Read security analysis. If money's burning a hole in your pocket, like maybe find a good value investor to do it for you. And I would say even more importantly that it's human nature to feel we've been dealt a bad hand. We live in a world that there isn't always justice. And it is kind of grim sometimes for young people. I get it. But at the same time, try to find the things that you can be grateful for, because gratitude is such an important virtue. Like if you're breathing in fresh air, you're doing good. If the sky's blue, you're doing good. You get out of bed, you put your 2 feet on the ground. It's a good thing. I mean, there's always someone who has it worse. And, if you start your day with gratitude, if you have faith, use it. If you can bring those words to your life, like, God, thank you, God, that I'm in good health today. Thank you that I can work and I'm in a largely free country still. Thank you that you gave me a good mind that's clear. Thank you that I have a family. Thank you that I have some money in my bank account. I can guarantee there's a lot of countries in Africa, they don't even know what you're talking about, brokerage account money. They live in mud huts. Yeah. Right? I mean, it gets worse. I mean, people who wake up and they've got a terminal disease, they got a brain tumor, they're going to die. When you're a priest, you see everything. You see, one day you see children being born and you're going to baptize them. The next day you see people getting married, they're in love. And the next day you see people in the hospital and they're dying. Life is really short, really, really short. Keep it in perspective. There's no speculators on the Forbes 400 for a reason. If you're going to speculate, you're on the other side of a trade from a guy who's going to win. Full stop. I never met a speculator in my life who was successful over a 10-year horizon. But, you can look at the Forbes 400 and find lots of value investors. So people get rich from owning productive assets for a long period of time. I'll repeat that. People get rich from owning productive assets for a long period of time. That could be real estate that pays you rent. It could be a dividend paying stock. It could be the most boring thing in the world, like Coca-Cola or Berkshire Hathaway or some other boring company. It does not have to be what you see in bright blinking red headlines on CNBC, because that's what they want you to look at. And just getting back to this issue of Greek would say Eucharistia. It means thankfulness, like gratitude. And that's where the word, you like this word in the Catholic Church. Catholic's also a Greek word. Eucharist comes from. Thanksgiving, Eucharistia. So the idea that, you might say, maybe these things don't have religious connotations, but I would beg to differ. And to be able to be thankful for what you have is very freeing. And then remember the many magnificent things to live for, that even if you don't have a lot of money, chief amongst them is love. How can you maximize love in your life? Whether that's by knowing God's love, by showing greater love to your family, which is easy to do when you know God's love. Maybe if you're not married, think about the magnificence of marriage. And there's nothing greater in life than that, than to find a companion. Your activities in capital markets should really just be like one small part of your life. It's the smallest part maybe. And even if you lost everything, you had nothing, thank God that he found you worthy of that too. Because that just means you're strong enough to handle it. Amazing. You don't want to fall into self-pity. That's not a virtue. You don't want that. Don't tell yourself you're a victim.
Amazing outlook. I think a lot of it, and I don't want to get too philosophical, but I think I know where a lot of it comes from, and it's social media, right? Comparison. Yeah. It's the
It's
root.
unbelievable.
It's the root to unhappiness, and a lot of these young kids are on social media. I'm guilty of it too. You go on social media, it's just a big comparison. I don't know, platform, right? And
Yeah. I feel like the key sin, if I can use that word, is narcissism of social media. It invites us, all of us, into being narcissistic. And the problem with narcissism, as you recall from Greek mythology, Narcissus, he looks in the pond, he looks at his own image, and he falls in love with his own beauty. So when she falls in the water, drowns and dies. Our gaze ought to be on the other. And when I say the other, I say chiefly, first and foremost, God. And from that, we will see the others around us in the light in which they belong. As that is to say, created in the image and likeness of God. Your spouse, you'll see her in that light. You'll see her as your companion that God gave you, not a problem, not someone who has to be perfect. You'll see you'll meet the podcast host who shares your faith, God willing. Doors will open for you. Start to see opportunities before you that you never saw before. So yeah, social media is doing a job on us, and now it's powered by AI. And you gotta shake yourself off that a little bit so that it's not controlling you, and use it as a tool, but don't let it interfere with your state of mind too much. And the way out of that, in my opinion, is prayer. Because AI and all these AI algorithms and social media will never be able to do what your mind can do. You're given a gift, and that is you can contemplate your creator. You can ask questions about your creation. You can ask questions about infinite goodness and infinite love that a created being should not be able to ask by definition. How would you even contemplate infinity? And you start to ask these questions about these ontological questions about your very being. And then you think of that, and you're like, well, how come a capital market? It's just like an intellectual endeavor. It's kind of fun. Like go play a game of chess or something, but don't let it drive your emotional states, such as you're manic depressive or something, or bipolar. You're excited when the price goes up and you're depressed when it goes down. That's craziness. You're going to waste your whole life watching blinking green and red lights on the screen.
Yeah.
That's underliving your life. Don't underlive your life. You have this magnificent capacity, not only to contemplate your creator, but to even speak to him. And that is commonly known as prayer. And if you do that, social media won't be able to touch you. If you can pray, even for a moment, you'll realize all the machines, the biggest server farms in the world with the most powerful NVIDIA chips will never be able to abstract the way your mind will. It will never have a soul. It will never be able to contemplate infinity or a life to come. It will never be able to pray. It will never be doing it. It'll just be really, really increasingly refined smoke and mirrors is what it is. And you don't want to keep looking at yourself. You'll fall in the water and die.
Yeah. Well said. Speaking of, and I'm going to let you go after this one because I know I've kept you for a long time. Speaking of smoke and mirrors, so there's two camps. I want to get your take because I think you'll probably have a pretty cool take on this. I own Bitcoin. There's I'm also a gold bug, but there's a lot of people who think it's the digital gold, it's the future, whatever. And then there's a lot of people who are like, this is smoke and mirrors, it's a scam. What's your take on Bitcoin?
Well, I think we can be pragmatic. I'm a bit of an etymologist. I love languages and words and so forth. I never was able to get past the name cryptocurrencies because crypto, as you know, in Greek means secret or hidden. And, earlier I talked about shadow lawyers and people you can't see, and I didn't reference them in a good light. Generally in finance, we want what? Transparency, right? You want to be able to read a balance sheet, know what it says.
Full disclosure.
Yeah, so I think the arguments for crypto is that there's finite supply and so price will have to go up. But the same argument can be made for gold, and not unlike gold or precious metals, commodities. There's really no way to know its intrinsic value. There's only speculative value. In other words, what someone else is willing to pay for it on any given day. So I could look at a balance sheet for Kohl's and say, well, it's 24 cents on the dollar because I can just do that calculus, right? It's not even a real calculus. I'm using the generic sense of the word. It's just second grade math, addition and subtraction. But you really can't do that with Bitcoin. So you almost have to kind of depend on the undulation of the market and its demand. And so you are at the vicissitudes of the market. But I never liked the name, so I never got past the name.
Interesting.
Yeah, I just don't. Why would I want something that's secret?
Yeah,
there's a lot in a name,
Absolutely. That's an interesting because I have read all the other stuff too about this is government invented and so forth, and that's.
Well, I mean, if it gets that convoluted and that complicated, I mean, that's like you're taking on a really tough investment in my opinion.
Yeah,
really
no
tough.
kidding.
And if everybody's talking about it, there's probably not a price value dislocation. I mean, you got to be looking at stuff nobody's looking at. It's this unloved, in my opinion, of course. But, time will tell. To me, I guess I would just say it's always looked very, very, suspect.
Yeah.
To put it nicely.
Appreciate your time today, Father. Where can our viewers find you online and learn more about what you do?
Well, I just want to reiterate the pleasure was all mine, Aaron. I really was humbled and grateful to get your invitation. I just think the world of your show.
Thank you.
And hope we can do it again sometime. But if to the extent they're inclined to learn more, we do have a Substack we started, which you can follow some of our articles where we get into security analysis. And they're very academic, the breakdowns, if you want to follow how we uncover value and how we get these sort of returns like the ones we talked about on David Lind. Our handle across social media like X or Facebook or YouTube is usually @Lemelson. We have this podcast where we put out an episode every week or two. It's a very visual podcast. It's not something you'd want to just listen to. You'd probably want to watch the video. Yeah. It's usually in 4K. But you're going to get a lot of religion on the YouTube channel. You'll get a lot more updates on X. And so it's really up to your listeners if they were inclined to follow. We're happy to have them. We're grateful for their support. Another thing we do is really on the podcast, it's a nascent podcast. It's really just trying to add something hopefully constructive and positive to the world. And we love to get people's feedback if they're inclined to watch it. So yeah, @Lemelson is usually the handle, and you'll see more links in the descriptions of our YouTube. Other than that, there's LemelsonCapital.com where you can read our history, or Mvona, our blog. We don't really maintain it too much anymore, but there's a lot of good articles there in the past on security analysis and economic analysis that are kind of timeless. And that's the best place to find us.
Perfect. Father Emmanuel, thank you very much for your time. It's been a pleasure.
Yes, pleasure's been all mine. Aaron, thank you so much.
Take care.